In the glowing heart of the financial world, where fortunes are made and lost in a blink, a 22-year-old trader named Alex was about to make history. It all started on a quiet Tuesday morning, not with a bang, but with a whisper. Alex, fueled by coffee and ambition, sat in his small apartment, staring at lines of code and market data. He wasn't a Wall Street titan. He was just a kid with a laptop and a hunch. His eyes were fixed on a small, obscure stock, a company most traders wouldn't even glance at. He noticed a tiny anomaly, a flicker in the data that felt like a secret waiting to be told. He decided to act. It was a small move, a calculated short position betting the stock would go down, invested what little he had, an amount that would be pocket change for the giant hedge fund, quantum analytics. For a few hours, nothing happened. The market hummed along, and Alex's small bet seemed to be just another drop in an endless ocean. He almost forgot about it, turning his attention to other trades. But then, the whisper started to grow. The tiny ripple Alex created began to spread. His trade, amplified by automated high-frequency trading algorithms, triggered a small sell-off. These algorithms, designed to react to market movements in microseconds, saw the dip and followed suit. They didn't know it was started by a 22-year-old in his bedroom. They just saw a trend. The sell-off gained momentum. Other traders, seeing the sudden drop, panicked and started selling too. The obscure stock, once stable, was now in a nosedive. The whisper had become a roar. Now, here's where it gets crazy. It's unbeknownst to Alex, the massive hedge fund. Quantum Analytics had built a huge, highly leveraged position on this exact same stock. They were betting it would go up. Their complex models had assured them it was a sure thing. But their models didn't account for a random event, a black swan born from a small apartment. As the stock plummeted, Quantum's position began to bleed money. Not just millions, but billions. Margin calls started flooding in. They needed to find cash, and fast. The fund's managers were in a state of shock. How could this be happening? Their perfect system was crumbling before their eyes. To cover their losses, they were forced to start liquidating their other assets. They sold off blue-chip stocks, reliable bonds, anything they could turn into cash. But this desperate act only made things worse. Their massive sell-off sent shockwaves through the entire market. Major indices started to dip. The Dow, the S&P 500, they all turned red. The financial world, once a picture of stability, was now teetering on the edge of a cliff. Back in his apartment, Alex watched his screen in disbelief. His small trade had returned a profit beyond his wildest dreams. But that wasn't what held his attention. He was watching the global markets tremble, all because of his one small action. The news channels were ablaze with headlines about the sudden market crash and the implosion of quantum analytics. Experts were baffled, blaming systemic risk and unforeseen volatility. No one knew it was all triggered by one young trader, who saw something no one else did. The collapse of the hedge fund exposed a terrifying truth about our modern financial system. It was a fragile house of cards, where a single tiny push could bring the whole thing crashing down. Alex had just learned that in the digital age, one person with an idea can be more powerful than an entire institution. The question is, what happens next? Thanks for watching, and if you enjoyed this story, be sure to subscribe for more.